everybody, welcome back if so to another market update video here at Benefits Central. I'm Benjamin, and today Bitcoin and the S&P charts. But before I get right into the market, please leave a like, drop a comment, and if you can subscribe, I greatly appreciate it. Honestly, everybody, I do apologize for not being as consistent with the videos. I've just been a little bit under the weather and as well as moving. I believe today's video is going to be the last video here in this location. But other than that, I've just been a bit busy trying to make sure everything is getting handled on the outside life of the market, and as well as moving, like I had said. But the market has been busier, and I did keep everybody updated. I know I didn't keep it as consistent on the YouTube, but I did keep everybody updated on the TikTok, Twitter, Instagram, all of my other social platforms, just because it's easier and quicker. To get a YouTube video out for you guys, it takes just a little bit more time, and I just didn't have time to squeeze it in there. But today is Friday, and we are going to go over the market and what is expected for the weekend that we have, and as well as this next coming week, and what has been happening, and as well as the expectations for 2024 and 2023, because Powell did come out and state what he is going to be doing for the rest of the few years, at least with interest rates and etc. But other than that, the consistent YouTube videos are coming back. We might skip a day just for once, just to set the everything up, our little base. And then other than that, we should have our consistent videos coming back out pretty soon. But other than that, everybody wants to know, why are we still falling? Why are the markets contracting so much? And really, it's off of what Powell had said. I believe it was last Friday, when I had posted everything for everybody, or this week as well. We did get another report this week. But really, the biggest message that everybody missed from Powell was that we're going to go to higher rates than what we thought and what everyone else thought realistically. He did raise it by, I believe it was 3/4 of a percentage. So it was 0.75 that we did get that rate to go up last week, I believe. But we are going to get there faster, and we're going to stay there longer, unfortunately. So you just won't see zero interest rate environments anymore. But this is what the Feds, they're trying to do. They will try to stay above core inflation, which is where the federal funds rate needs to be in order to get the inflation down. So it totally makes sense. Everything is happening for a reason, but which is unfortunate about this is basically like they're looking for a 4.5 to 5% going into next year or 2024. And obviously this is going to adjust within that time range, just because, you know, there's events and other things that happen in between that timeline. But this is where they're looking to plateau, at least, and they didn't say anything about stopping hikes, but this is usually where he was saying that the economy is strong enough to withstand everything that they're doing. The housing market's still, fine. But unfortunately, this is going to cause some pain for businesses and smaller corporations as well, as well as us, as well as prices on food, gas, and water and electric and everything else, etc. They want to keep financial conditions restrictive and continue to tighten them, keep them tight, just to make sure that they aren't slipping in any area and letting money and every other aspect that they're trying to control loose. So it is going to be pretty interesting to see how the next few years, and at least this year, closes out. But other than that, not a whole lot affected the crypto market. We are all at critical levels, including the S&P 500. The stock market will crash with what Powell is doing. But realistically, if we don't see that these don't hold on the next support, then the next CPI report, realistically, if we don't hold this next support that we do come in contact with, which I'll go over to show you guys, but if we don't seem to hold this, then we will be waiting for this next CPI report, and that will really show us whether we continue to break or try to bounce off of that in reverse, realistically. But other than that, everybody, looking at the daily for the dollar, we did pass that 111 that we did state, just because of that RBI formation once we did pop off of our 20 moving average. But other than that, looking at the weekly, we're going to continue with that doji and then completion. The weekly just isn't done yet. We do have Saturday and Sunday to come. The weekend is done for the dollar, we will see it close today, and then we will see it continue possibly between 5 to 6 on Saturday or 5 to 6 on Sunday. Sometimes we do get a new weekly on Saturdays, which is insane, but that has happened before. So Saturday, Sunday, just keep a lookout. I will keep you guys updated if anything. But other than that, looking at the monthly, which we don't have too much to look at, but we are still continuing pretty bullish. which isn't necessarily great for us, but that's just showing necessarily where everything is going as of right now. Reason I've included the dollar index in our watch for the lives that we end up taking live trades on, if you guys want to catch some of my trades. But other than that, let's jump into S&P real quick just to show you guys what's going on. Finally, obviously, off of that top of the descending channel, we continued to, crash bearish. But right now, revisiting that triple bottom that we had broke completely bullish off of, now revisiting it and testing these waters once again. However, we do seem to have a lot more bearish momentum, obviously with fear in the markets, and as well as a lot of more things. As well as, like I said, fear, but retailers are putting less into the market because of Powell's report that he had said about higher interest rates and etc. This will cause a lot more fear, like I said, into the markets. People will stop investing, which will slow the markets down and then, evidently push it to the bearish side, But other than that, we are retesting this. If anything, if we do end up breaking this, and I do expect us to retest the lowest that we've seen, around 3,600 for the S&P 500. And then obviously if we break that, if we cannot double bottom on here and decide to form a W and continue back up, obviously we're oversold. So I am expecting some kind of bounce around here, at least a dead cat bounce of some kind. But other than that, we still have to range a bit in this descending channel that we have, just to see where we are going to necessarily break. And this is a daily descending channel, so we do have to see where we are going to end up breaking. We did, however, just get this bearish cross, which isn't necessarily great for us right now, but this is realistically why we are going to continue to the downside. But we do just have these little levels that we are testing for right now, just while the market does trend to the downside for right now. However, looking at the weekly, we are coming up on our 200 moving average, as well as we did last time. We didn't quite touch it last time, which we had enough respect to push all the way back up. However, looking at this right now, it seems like we might want to come back down and test it unless we can make a higher low, which would start to show some bullish activity. However, if we do end up coming and testing this, we could possibly wick below it, if anything, with a lot of aggression. But if that doesn't happen, then I do expect us to tap this and then find somewhat of a bounce, find some ranging power within this on this descending channel, and then that'll give us some more room to reset the RSI and see where we are necessarily going to be going for the rest of the market, for the rest of the year at least. See if these interest rates and the higher hikes will end up realistically pushing the S&P 500 lower, just because Powell did say that the markets are strong enough, the economy is strong enough, the housing market is strong enough to withstand everything that they are doing, as well as the hike rates and as fast as they are going. They're trying to get there really fast, and they're trying to get all of this done quicker, if that makes sense, just to speed up this recovery, just because of what we went through during COVID and how much we had basically amped up the market, just flooded it with juice and got it to where they wanted it to get necessarily, and then now they're trying to bring it right back down to at least some normal levels. But excuse me, other than that, we will be revisiting, I believe, our 200 moving average for the weekly. Our monthly, we will be revisiting our 50 moving average for the monthly. And obviously, like I had said, we should end up getting some sort of bounce off of these indicators as they've been strong and have done so. But like I said, we can wick below these, as that's happened before with extreme aggression. Like we're seeing extreme, not necessarily bad news, because some of this can be bullish news, just because now we know when to pump and when to dump right before the CPI reports and etc. Just because we know that these reports aren't going to be bullish for at least until 2024 or 2023, unless we get updated in the time frame in between. But other than that, we are going to definitely touch our 50 moving average. If not, then like I said, we will make a higher low, and then we can get some bullish activity going before the next CPI report, and then most likely tank again and then range within this descending channel. But other than that, that was just the S&P 500. Again, we will be closing at around 5 to 6 today. We open in the next 10 minutes. But 5 to 6 we will close, have the weekend, and then Sunday we should get the new daily between 5 to 6. But other than that, that was the S&P 500. Jumping into Bitcoin right now, everybody wants to know desperately what is going on with this crypto coin. And as you can tell, we've had a lot of wicks, a lot of interesting candles, honestly, throughout this consolidation. I wasn't really too happy with this. We have caught a few pumps within this consolidation, but honestly towards, I would say, just to show you guys, honestly towards what is this, our daily, I would say, yeah, realistically, it was within this time frame. I haven't traded anything. I've realistically just watched the portfolio go up and down, up and down, up and down, and stayed out of trades just because of how crazy the manipulation and realistically how insane the market wants to be, as well as stuff like this, like candles having all the bearish momentum and then getting bought all the way back up and then pushed all the way back and then bought. Yeah, it's insane. But other than that, if we can end up bottoming out right here and start to form some kind of support, we can see that we end up getting a bullish cross on the daily, and that would definitely be what we wanted to respect this support level. If not, if we decide to break this, then obviously we are below our 200 moving average, but we are oversold. Not extremely oversold, but we're really oversold, and I would like to see a cat bounce, some kind of dead cat bounce, some kind of bounce off of this, if anything a W formation, to complete what we are trying to do for the Bitcoin momentum, at least, just because we've tanked a lot and we still are technically in this descending channel. A lot of people, including me, have said that we broke out of it, but I mean, technically still looking at it, we are still in it, and we still have a few days to break and range out of it. A few people said we did break out of it as well, but it was a bit of an early call. But other than that, realistically, looking at the monthly, we are continuing that GBI formation if we do not bottom out here. Like I said, lowest we're looking at is 1700, 17800, and if we end up breaking this and we can't hold this, then we will end up revisiting, I believe, our 12,000, almost 10,000 for Bitcoin, which isn't necessarily what we would like, but that is necessarily what the charts are looking like they are attempting to try. Again, like I said, it is up to how we react. We do have another CPI report data coming soon, so we do have to just be patient and see how we decide to range. Again, like I said, a lot of fear means that a lot of money is coming out of the market, which means the market is coming down, but that also means that the volume is slowing down as well. So it will be pretty interesting to see how we range and decide to range for Bitcoin and the rest of the crypto market. However, as of right now, that was just Bitcoin, Ethereum, diving into Ethereum just because of what has been going on with the markets, and what we've been trying to catch. At least it has been ranging a little bit different. There is a ton of data here. I'm just going to get rid of this though for everybody right now. However, diving into the charts, you can see that we did end up forming a doji right here. This can be a pivot to continue us to the downside. However, we are revisiting that 1300 level, the top of our triple bottom that we had formed and then pumped towards. So Bitcoin fell below it to its support, as Ethereum is testing the top of this. So we can end up getting a reversal here, as we are oversold on the RSI, starting to at least come back up for a dead cat bounce, at least around 1500, 1400 levels again, before we can see some more downward action and momentum pushing us back down, if anything further. If not, then we can get a little bit more momentum, maybe push this to a bullish cross, and then at least revisit our 200 moving average on the daily, as this is a descending channel now. We had our ascending channel, broke bearish, and then now we have our descending channel. Hopefully it'll break bullish. But other than that, realistically, that was just Ethereum. There's not a whole lot cooking for Ethereum. We just tested our 200 moving average for the weekly. As of right now, it seems like we are respecting that as of lately. However, for the weekly, we are closing within this, I believe, I don't know, it would be within Sunday 5 to 6. So we do have a few more days to see how this ranges. But I do believe that we should end up respecting this, and we should end up getting somewhat of a bounce later on throughout the weekend when the market has closed, and then we're not necessarily going off of the market and the CPI data reports, Powell, and how the stock market is reacting and digesting necessarily that report. And then we could see cryptos at least come and bounce up a little bit throughout the weekend. So this weekend should be a little interesting. However, looking at the monthly, we did end up testing our 50 moving average for Ethereum. So as of right now, it seems like Ethereum has tested its critical levels. Like I said, we do have to just see how we end up breaking bearish or bullish to these levels. We are at very critical levels. So as long as we can hold these, I do have faith that we will try to and attempt to continue to the bullish side for cryptos. Bitcoin is looking a bit interesting. However, that is okay. We will just see how it continues to range out as Ethereum continues to pump up. But other than that, everybody, that was just another quick market update video for you guys. I will have a full in-depth video coming very soon about just everything. A lot of people want to know how to trade and want to join into trading. I will drop another video on that as well. But like I said, this was just another quick market update video for you guys, and I will catch you guys in the next one. Ciao.